What's going on, everybody? Good morning. Give me just a minute. Get everything rolling over here real quick, and we'll see what we got going on the day. Let me save my goodies over here. All right. Got to get the rest of that sleep out of the eyes. The old eye pieces. Oh, man. All right. Happy Tuesday. Sorry, I still got something on my eyeball. There. I think we're good. Happy Tuesday, everybody. Happy Tuesday, the 24th of February, 6:30 a.m. I'm ready to rock and roll. I don't know about you. Today we have got one piece of red folder news coming out, and that's going to be AUD inflation numbers. So let me get that my window shared. Oh my goodness. Get this shared real quick. Wow. I had something in my eye right when I hit go live, and it yeah, I think it's almost out. Anyway, looking at the economic calendar for the day, guys, 6:30 p.m. my time here in Kansas City at Central Standard Time. We do have inflation numbers coming out for Australia. And one thing I was noticing yesterday on this release, on this report, was if I take a look at the history of this thing, it actually has a pretty good history, just like a lot of, let's see here, just like a lot of reports. It has a history of missing expectations quite wildly. That's not it. Hold on a second. CPI. Yeah, that's it. Never mind. Because if you take a look at this chart of the Aussie dollar over the last, I don't know, looks like about a year, each monthly release, you'll start noticing that they miss it every time, literally every single time. So back here last January, that 3-month period, they missed expectations on all those by a 0.1%. Now the forecast numbers, the red dot, the obviously the top of the blue where it closes, that's the actual number that came out. So there's 3 right there where they missed expectations, followed by 3 months in a row where they exceeded expectations, followed by 3 months in a row where they missed expectations, followed by this last period that we're in where they've had 4 months where they have exceeded expectations. So it's all over the place, but hey, at least they're within 0.1% every time, right, of this release. So if you kind of look at the trend that kind of presents, that's 3 missed, 3 up, 3 missed, 4 up. So does that mean that they're going to kind of recalibrate themselves this time and totally miss to the downside? Okay. To the up or to the downside? I don't know. Who knows? Who knows how these red folder events come out? But the point I wanted to make was they misread this report every single time. Okay, so since I know that, I just want to be aware of that, okay? Especially for anybody trading inflation, which you should always be careful. You should always wait till the report is released and then let the soot land where it may, so to speak. Okay? Let everything shake out. Let the volume kind of come back to normal. In this case, on Aussie-based pairs, and then look for a trade at that point. Okay. So yeah, just a bit of care to be made on that. If we take a look at Aussie-based pairs, since that's the lone red folder event coming out today, we do still have Aussie Kiwi at the very top of our bullish setups. Hello, Thato. How's it going? So we got Aussie New Zealand at the top, Aussie Yen, Aussie Swiss, and Aussie CAD a little bit deeper on the bullish side. And then if we look at the Aussie dollar, where it's the quote currency, we've still got a couple pairs at the bottom on the bearish list. Because remember, Aussie overall still has some pretty good strength. I do believe we are still chilling. Let's see here. Macro scanners, surprise index. Let's go over here real quick. So, okay. So yeah, there you go. Where's Australia? Ah, we're down to 50%. So we did have a little bit of shakeup on the Aussie dollar, guys. It is now as neutral gets. Let me see. What did I miss? Was there a report yesterday I missed on Australia? Aussie. Interesting. Yeah, I'm just now realizing that Aussie came back down to 50%. I guess I thought it was higher than that. Let me see. What's the last Aussie report we had? Aussie, flash. So that'd have been the PMI data from last week. We missed expectations on those. Okay, that's what it was. So yeah, we missed Aussie PMI data readings last week. All of them, or well, I should say both of them, manufacturing and services were misses. So that's probably why it dropped. Okay. All right. Well, just taking a look over here then, yeah, Aussie at 50%. So that's now in the middle. The leader is the Rand, which I don't trade, South African Rand. You got the Turkish lira in there as well. But as far as tradable currencies, Euro is the one strong currency there is right now, as far as the 8 major currencies. Okay, as always, I kind of look at that 40 to 60 range as far as, what percentage of high impact events have exceeded or missed expectations. I kind of look at that 40 to 60% range as a little bit more on the meh side, meaning it's not really strong enough to go out and actively try to buy. It's not weak enough to go out and sell. Okay, it's just kind of in that no man's land, that neutral zone, if you will. So, yeah, the euro is the only one right now as far as the longs. Now, as far as the shorts, yeah, and you got Kiwi and the yen at the bottom. So the yen for sure, it's under 40%. Kiwi, a little over. It's right at the 42%. So yeah, I mean, that's close enough, guys. I would actively be looking for sells on that. So any combination of the euro and then the Kiwi or the yen, there you go. Euro New Zealand longs, euro yen longs. Okay, if you're just strictly isolating the fundamental analysis on this thing, on these things, then that might look like some good opportunities. So let's go look at those on the top setups and see what we got. So euro Kiwi, euro yen, and see they're not on here as we speak. So let me look at the neutral readings and see where we're at. Hold on a second. Okay, so let's see. Euro, there's euro New Zealand. So that's giving us a -2. So it's really not syncing up the way I like it, guys. Okay, euro is the strongest currency. The Kiwi is the second weakest, but yet we're in a neutral territory. And if anything, I want to sell. So I don't really like that. What about the euro yen? Where's it at? And why is my mouse not scrolling? I swear, guys, I'm going to take this mouse and throw it in my pond outside. I've had a history of bad mouses. Where the hell is euro New Zealand at? Scroll, you stupid thing. Good God. It's not even there. So where's euro yen at? Sorry, guys. I'm trying to find. Oh, it's still at. Okay, it's on here. So it's actually giving us a bearish reading, even though the euro is the strongest currency and the yen is the weakest. So it's just not matching up the way I like. Yeah, it's on top setups. Thanks, Thedo. I didn't realize that. I was just looking at logic saying, hey, euro strong, yen weak, Kiwi weak. But yeah, they're not on they're on the top setups, if anything, in the opposite direction. So I don't like the way that's not syncing up for me personally. The way I look at the Edge Finder results, I would prefer, if euro is the strongest currency and those other two are weak, I would prefer to see it on the bullish list. Definitely not the bearish list. So yeah, that right away kind of presents a little bit of a issue with the way I like to read this thing. Because I think fundamentals are the most important thing, guys. Let me see here. That's just the way I look at it. I am in one trade, guys. I am in gold. Now, gold is only given a +4 reading, or it was as of last night. I guess I should double check that today. Yeah, +4. So it is a +4, which is neutral. And it's mainly, I mean, it's 1 point away from being officially on the list, but it's really all about the technicals right now. The technicals is why it's getting such a high reading to begin with, because the eco score, the sentiment, Okay, the relationship between smart money and dumb money is just right at neutral. So it's not really giving anything. But when we're looking at technicals, a +4 by itself for technicals is pretty dang strong. So just taking a look at gold, we finally, if you guys remember, we did finally break on a daily chart. We did finally break this double top. And if you also remember, I drew up these boxes up here. I drew these boxes below, these kind of liquidity boxes. So with the way I was looking at this, I wanted to see what's going to happen. If when price comes up to this area where these liquidity boxes are, is it going to bounce straight down? If so, then I was going to be more interested in a buy way down here in the demand zone. Okay, the 4-hour demand zone. But if we break this structure and go a little bit higher up, like we did, well, then I'd be interested in more of a pullback retest, if you will, of this double top area. So within that, and if I just kind of do this, let's go. Well, that's the top there. So let's just, okay, you can see that that's, let's do this. Okay, so that right there is kind of the top of this, the top here, and then the top over here. So it's kind of, it just kind of creates that demand zone, if you will, kind of a different way to look at demand. But anyway, what happened is we've come up and kept going. So I'm just basically looking for a bounce off this area. So what I did last night was kind of went down to, let's see, a 1-hour time frame and looked at this area right here. I might have mentioned this yesterday, might not. You went long dollar yen. Okay, yeah, let's take a look at that right after gold, because I do know that it was giving us a nice signal, huh? But yeah, just to finish up here on gold, I observed this. It actually, I was looking at it on the 4-hour time frame, looking at this candle right here. Okay, this red candle right there as a zone of demand. And what happened? So we had price shoot away, come back, and then this is a 1-hour chart. So I saw that we had such a strong close. Now, this was still by definition a bearish candle because it closed underneath the 50% of the range of the candle, right? Down around what, maybe 40%-ish? Yeah, something probably 40%, 35% at the bottom. So yes, bearish candle, but very strong close up, very strong wick up. Let's go to a 15 and see what it looks like. Okay, here's our 15-minute chart. So price drops into the demand. And there's your 15-minute candle that closed right at about 50%. And then we had our first green candle here. And where exactly did I get into that trade at? Let me double check here. Sorry, guys. I got to pull up my other chart over here to see where I ended up getting into that trade at. Gold. Where are you at? There you are. All right. 15-minute chart. Come on, Tiger. You should have had this up. Okay, it was that candle. So yeah, I ended up getting in on, actually, yeah, on this candle right here. I was watching a movie. Guys, we had the Olympics. We had the U.S. men's hockey team that won gold for the first time in 46 years on Sunday. So yesterday evening, I actually watched the movie Miracle. It's got Kurt Russell starring as the coach of the U.S. men's hockey team. This is the 1980 Lake Placid team, which was their second gold medal. So it was a really cool story. But anyway, yeah, I started watching that movie right about the time price hit the demand. So I waited a little bit. And then, yeah, I ended up getting in back over here after we kind of broke this new structure. That's kind of what I was looking at. We had bounced under the 20 level of the RSI on the 1-hour chart. We maintained keeping the 50 EMA above the 200. So I liked that. I also liked, obviously, on the daily, we got the 8 EMA above the 21 EMA. So that's a nice bullish mechanical signal outside of the obvious, which is higher highs and higher lows, right? So I like to, I've added this in just as a mechanical way of looking at trend. And I like to make sure that that matches up as well with higher highs and lows. So it's really just a filter, just to make sure that the true trend I'm looking at is legit in a mechanical sense, if that makes sense. So anyway, daily good, dropping down to the 1 hour, same thing. Okay, 50 above 200. But as far as the RSI, I was looking at that on the 15. So 15, okay, RSI below 20 on the 15-minute time frame. So that's essentially the time frame I was looking at. And yeah, so the way the rule states on this backbone strategy, with looking at these filters, with looking at the RSI and the moving averages, the way it states is when you get your first bullish close, well, that's where you enter the market. And I was kind of torn, because obviously that right there is our first green candle, that little inside bar right there. But I kind of played around with this a little bit, because obviously, yeah, I should have been in this trade right here, right after we broke the high. But then part of me also was kind of interested in waiting for a break of that candle right there, since it had such a strong close, right? So I decided to just sit on my hands for a little bit, watch my movie. And then at one point I noticed that we did close above that candle. So at that point I was thinking, well, you know what? I don't want to chase this at this point, because if I buy right here, that's kind of, that's, think about it. I mean, that's, my demand is way down here, but my supply is way up here. So I don't know. I just felt like I would have been reaching at that point. So I basically sat on my hands, and then I actually got another decline. So when I got this decline down here, if we're just isolating like this little consolidation area here, okay, once we got that, that's where I thought, okay, well, let's go for the breakout of that box, and that'll be my entry. So right or wrong, that's the one I went. That's the one I went with. So I ended up buying this candle. As you can see, it's just going sideways, and I kind of drew up this triangle, matching lows, low, 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 high, high, high. So it looks like so far, just like any good old triangle action you get, okay, it's got to bust out of one zone or one direction. So it looks like it's unfortunately bouncing against me at the moment. But anyway, that's my gold trade. It is a +4, but I really liked that everything else matched up. And a +4 is better than a -4, right? If we're looking at neutrals. So that's kind of the way I was looking at that. But it matched all my other odds enhancers, so I went with it. Let's see here. What else have we got? Dollar yen, you said. So we'll see how that goes. Dollar yen +5. I'd like to get into dollar yen myself, to be quite honest, because if we're looking over here, as again, okay, the US dollar 53, so it's a little more neutral. But again, the yen is the weakest currency, so I like it already. I like it from a fundamental perspective. Dollar yen, dollar yen, dollar yen, dollar yen. Gosh, I don't. Yeah, I tried to recalibrate my mouse yesterday, and it just didn't do anything. So I don't know why. I just don't understand why it's going so damn slow. All right. Yeah, dollar yen, we had a really nice spike. I was let's go from the start. So from the start, the nearest, oh, we got a new daily zone in here. 1, 2, 3, 4 candles. That's too many candles, though. I mean, by definition, that right there is a daily demand, this red candle, because we have a gap above it. But that's 1, 2, 3, 4 daily candles. That's too many consolidation candles. My rule is always 3 or less, right? So I can't utilize the daily time frame. I just can't. Not with 4 not with 4 candles. That's too much time. So I have to go down to 4 hour, see what we got down here. Oh, where'd you get in, by the way, on dollar yen? Like, what time frame do you look at? What price did you get in? I'm just curious. Entry price, maybe your stop loss price, just so I can see where you're at. But yeah, I've actually got some alerts down here. So yeah, dollar yen. Obviously, we've had the intervention talks for the last couple of weeks or so. We did have that little bit of a rate check, I guess you could call it, a couple of weeks ago, where we did have some pretty decent size spikes downwards. Right. So kind of like the test position, the feeler position, potentially by the Bank of Japan, to see if we can start getting some momentum downwards. That first rate check, we did get a boost down, but then we kind of retraced that. Was this a second rate check right here? Who knows? So there's really a couple things. Yeah, you got a lot of people, and as you guys can see, I drew up this daily supply up here. There's going to be a lot of people wanting to short that area. Okay, we were already there once. That's starting to get close to the 160. It's basically 158, 160. Okay, all these zones up here are very good potential spots for intervention to take place. Right? Think it's quite the wide range, 158, 159 to 160. Right? If they are actually going to load up and do that, maybe they're waiting for the State of the Union address tonight, huh? Okay, Thado, daily demand. Okay, got you on that. Yeah. Hey guys, we got State of the Union tonight, President Trump. So talk about a bunch of eyes being glued to the TV tonight. Okay, I think that's 8 o'clock my time, so that'd be 9 o'clock. Is it 9 o'clock New York City time? I believe it is. I got it right here. I do believe Tuesday. Oh wait, that's last week. What the hell am I doing looking at last week? Tuesday, President Trump speaks at 8 p.m. Yeah, so that's 8 p.m. Central Time, Central Standard. So 9 p.m. Eastern Standard Time, guys. New York City time is the lip flapping session. But anyway, getting back to dollar yen. So yeah, obviously, guys, be careful around that time. That's a red folder event, guys. It's not. I mean, it's obviously on the list, but it's a red folder event. A lot of people don't think about that. It's not an economic piece of data, but it's the State of the Union. So no better person to watch on a gauge of the economy than, listening to it come straight from the horse's mouth, as they say, the people that run things. So there's the president talking tonight. Be careful with trades. You could get a lot of whipsaws, a lot of volatility. I advised yesterday just to look at it as your popcorn trade of the day when I was on Trader Nick's stream. Okay. Take your mouse, throw it behind your laptop, stay the hell away from the buy or sell button, and just put your favorite chart on a 1 minute time frame and just sit and watch the earthquake telemetry machine action. Okay. Get your popcorn, sit, or your favorite beverage, whatever the case is. And I just highly advise stay out of the markets. Really do. So anyway, dollar yen. Yeah, so again, that is by definition a daily demand, but there's just too many candles there. On a 4-hour time frame, one thing I do kind of like is this topping action right through here. I got my magnet on. Just kind of looking at this, these tops, these wicks. I was kind of looking at that as a nice, form of resistance. So could it become support? Could it become support? Well, if it does, I got a demand zone right underneath it. Okay, talking about this green zone here. So that's why I put that alert there. Actually looking at it on a 1-hour time frame. Really nice basing action. Didn't spend too much time there at all. So if I'm a bank and I'm putting in a large position, well, I didn't get a whole lot of time to do it because remember, they have to layer their stuff in. They have to accumulate. They cannot put on a full position. They can put on a full position. They'll just get a shitty fill, right? A horrible, terrible fill. They might place the order here, but they might get filled up in this area, up in this area, up in this area, right? So they have to, so that's bad prices. Okay. We're talking the difference of 50 pips, 100 pips. For $100,000 orders, $1 million orders, that's a lot of lost money, right? So if they've started their positioning down in this area before this spike up, well, there you go. when price comes back down, if they started a position here, they're going to want to continue their position down here. Right? Put in the last of their order or put in more of their order, whatever the case is. But that's where I personally would be interested in trying to get into this trade, because we're a ways away from the intervention type area. Okay, that's way up here, or the rate check areas. Okay, so I mean, at this point, it's just basically making one big W, right? Down, up, down, up. Okay, supply and demand act as magnets, right? So if that's the case, then I could definitely expect price to continue back. So I like it, man. I like your trade that you're in. I like it a lot. And then I know Nick kind of looks at his zones a little different than I do. I think he probably would draw up something like this as the zone, something like that, because he's basically looking at like former resistance and kind of incorporating them that way. I mean, I look at that as a little bit more of, support resistance. That's kind of the way I look at it. But the man just had a $120,000 win on gold, right? Or whatever it was. So that's you cannot argue with that. What was that? 100,000? Was it 90,000? I think he had on his gold trade here a few weeks ago that he closed out, the one he had open all January. And you talk about baller, man. How would you guys like to have a $90,000 profit on one trade, $100,000 profit? That's pretty crazy. So yeah, I look at the zones a little different. I mean, again, this is what I spent 10 years on before I realized how important the fundamentals and sentiment was. So if anything, I overanalyze these things. I mean, I studied every variation of supply and demand zones, and I'm glad I did, because it makes looking at a chart, a lot quicker. But anyway, yeah, I'm looking specifically for basing action with gaps, and that's how I define demand. And that's not my definition either. That's coming straight from the horse's mouth of a trader that taught us, that worked on the floor of the Chicago Mercantile Exchange, and how he saw orders and how they bounced back and forth between the major zones I'm talking about, and that's supply and demand. So that's kind of how I got it. There's a few different variations of supply and demand out there, guys, but you can make any of them work, right? I just choose to look at it a little different way with regards to unfilled orders from specific zones with specific rules like gaps and some other things. So. But yeah, I like it, man. But if it in the meantime, if it goes against you, I mean, I'll be waiting for an order down here. Maybe we can layer in and push price back up to the intervention zones, right? But otherwise, I like this area, right? I really like this. Ooh, Lord, let me turn my magnifier or my magnet back on. This is mine right here. If we get a bounce into here, I really like this zone. This demand right here, this candle. Price spent 1 hour there. And then what happened? You had a big, lovely gap. This leg out, big expanded range candle, left a big runaway gap in its wake. You had a lot of volume in that area. So that's institutional activity, guys. Again, us retail traders, we don't have the power to do that unless we're, what do you call it? What was the stock they pumped up? GameStop. Okay. GameStop. When you get some action like that going on, where, the average retail trader is all pumping something together, that's the only way you get candles like this on the volume spread analysis, the tick volume, the activity volume, however you want to look at it, right? But so anyway, yeah, that's quite a spike. I love red candles. When red candles are part of the basing / leg out process, I love it, guys. I love it. That tells me that that's an exciting area. If that leg out candle was just one of these regular green candle size down here, I wouldn't be as excited. But because the candle like tripled the previous candles in length, okay, basically tripled these green candles over here, the relative candles. Okay, that one back here was a really good move. Look at that. My goodness. Right. So, yeah, if we get a return to that area, in fact, I need to put an alert on there. So I had an alert down here, guys, but now we've had something even stronger form really since I was asleep, right? So that candle formed at 1 a.m. my time. So now that we got that new candle, that new strong area up here, I got to move my alert. I got to put my alert right there at the proximal line of this demand zone. Okay. I love this. I love it. I love it, guys. Remember, love is stronger than love. You can love something or you can love it. And if you love it, that's a strong emotion. So when it comes to this demand zone, I love it. That's L-U-R-V-E, lurve. Okay. Whew. Lord child, I love that because I got everything else intact. Daily chart, I got my, oh, wait a minute. Never mind. I forgot. I cannot use the 8 over the 21 over here because it's actually still below. Yeah, this is one where I'd probably be this is probably one where I'd be going against the rules. But I tell you what, again, guys, all other things being equal, I've always said this. If I had my choice of one thing to look at, one oscillator, one indicator, what would it be? It would be just the naked charts. It would be the supply and demand zones. Because remember, that's the magnet point. Hey, that's where the ping pong ball gets bounced between, is the zones. So when I get a zone that looks that powerful, though, oh yeah, I like it. I like it a lot, a lot. If we're looking at a 15-minute, I would still like to see price. When price comes down into the demand, I would still like to see my RSI at the 20 level or below. Because so far my 50 is remaining above my 200 EMA. So that's passing. So that rule is good. I just need to see RSI touch 20 as price touches demand. And that's just a simple trade from the zone to the top. Love it. We'll see what happens. We'll see what happens. Go look at the 15 one more time. Yeah. That's it. That's it. I like it. I like it. I like dollar yen. I got to admit. Oh, yeah. Let's go look at a few other assets I was looking at. So I did have a few other alerts hit while I was sleeping, including pound Aussie. So I was just looking at a couple zones. Let's go down here. So this was that 10-minute supply zone that I was watching on Friday. I don't know if I mentioned this yesterday. I know I mentioned this on Trader Nick's stream, but price came up to this supply zone and missed it by 0.2 pip. So 2 pipettes before it decided to drop in the direction I was after. So this was the one I was cussing and discussing to myself Friday, thinking, how the hell did I miss that trade? So now, as you see, we've finally touched it. But everything's changed, guys. You know, everything's kind of changed. So when we had price almost touch it back here, we had, you know, we had lower lows and highs. Well, now we're kind of getting that sideways action going, and we got a newer high on a 15-minute chart. So this was my lower high. But when it came to the next low, we actually had a higher low, right? So this kind of all shifted because that turned into a higher high. This basically a double top, but you could say it formed a new lower low, but it just started getting choppy and sideways. So I don't know about this now, but as you can see, now that it's bounced into the zone, and I got another supply zone ahead of it, we've already chewed through the whole zone. So I'm probably going to ignore this now as far as a short. I don't know. We'll see what happens on this 1 hour, this current hourly candle. if we can get a close down to the the bottom of the last hour's candle or maybe slightly below, then possibly that could be a nice momentum change for a short opportunity down to demand. I don't know. I'm just basically going to see what happens. Of course, that's a whole 54 minutes away because this candle just started 6 minutes ago on a 1 hour chart. So yeah, we'll see. Here's what I'm going to do. I'll put a line right here, and then I'm just going to put an alert right there. I just want to see what happens if and when price comes down there within the hour, by the end of this hour. And I'm only going to put this alert out literally for like 3 hours. There we go. Okay, if this comes down fairly quick, that might be a possible breakout to the downside. Okay, because it did hit the zone. Now it's a small zone. It's only a 10-minute supply zone, guys. It's a small time frame, and there's a lot of noise on the smaller time frames, right? So I don't recommend this. I honestly, I do not recommend small time frames like this to anybody. The only reason I'm doing it is because I've spent 12 years looking at these zones on all these different time frames, and I kind of, and it takes a while to figure it out. So I feel like I've got most of the nuances down. So I don't recommend this at all, guys. You guys still, even after 12 years, hear me all the time blabbering that the daily and the 4 hour confluence is my most successful one. It's the most successful for a reason, because that's where the banks are playing. Down here, the algos are playing. The bank's algos, right? So it's a sketchy area, but we'll see. Okay, this is just something I'm personally looking at on that smaller time frame. So, and I'll probably end up, again, and I'm going to be picky on this because the only way I get in this trade is if I get a close at the bottom of this hour, or I should say at the top of this hour, guys. A close at the top of the hour, the next hour, at or below this line, because that's my 1 hour. That's the bottom of the 1 hour candle previous, right? So we'll see. We'll see what happens. I'm sure I could probably find something a little better. I mean, if I'm looking at pound Aussie outside of this area, obviously my favorite area is going to be up here where you see the daily 4 hour. Okay, there's my confluence. So the daily, and then the red is my 4 hour. Basically looking at that 4 hour candle. Okay, that 4 hour candle gives us a gap from here to here, just like that, showing the strength. Now, it's not the biggest gap, but it is a gap nevertheless. Price drops, bounced into demand. We did get a reaction from this demand. Talking about this red candle before the big leg up, but then we rolled over and kept going through it and broke structure. So I like that 4 hour candle, and we'll see what happens. That's going to be my favorite. So let me see. And speaking of, I'd better put in a new alert. I'm going to delete that one. Oh, wait, no, that's the one I just put up. So never mind. I'm also going to put an alert up here ahead of the daily supply. 1600, that's 4 p.m. my time on Friday when the market closes. That's when I have this alert expire if it doesn't hit. All right, so there's pound Aussie, ladies and gents. Still giving me a nice, ooh, wait a minute. Boy, I tell you what, it seems like every time you turn around and refresh, something falls off. Yeah, we've got slim pickings overall, guys, in currency land. Okay, we don't really have a whole lot of options. So I'm going to definitely be paying some more attention to stocks today, too, just to kind of backfill and give me some more opportunities. Look at that. Look at all the fives. Okay? And even the sixes. Remember, guys, I personally prefer the sevens or higher. That's just the way I see this, or -7 or lower. So for that matter, I've got 4 assets. I've got oil, and then euro, Aussie, euro, Swiss, euro, dollars. So hopefully that helps you out. Well, you're already in the trade, I guess, on dollar yen, but I guess I've already went over that. So yeah, I'm really eyeballing mainly just these 4 assets. So let's go look at oil, which is the lone bullish asset that I've got excitement about. See, Yeah. See, oil hit two demand zones I was watching. See this one over here? So this one hit yesterday. I was yeah, see the reason I didn't buy off this demand, God bless it, yesterday was because we did not touch the 200. So it just missed the 200. Also, because it did not go below 20 on the RSI. So close, but no cigar. Close down here, but no cigar. And then we got the bounce up. And we did actually get a little bit of a retracement, but this is what I don't like. When price kind of rolls over and goes sideways after hitting a zone, when it gets lazy, I don't like that. Because more often than not, that'll just chew through the rest of the zone. But yesterday was a little different. And at 7:15 p.m. my time, we had a really bullish candle come up. It's a red candle, but it's bullish because it closed closer to the top than it did the middle or the bottom, obviously. After it bounced off the 200, but the problem was the RSI was not at the 20 level. So I avoided this. And of course, it proceeded to go to the next supply zone. Bounced off the supply zone. And in the wake on that demand zone that was created, what happened? Price came down, tapped into the demand zone and the 200 EMA. But then we didn't have RSI at the 20. So I stayed out of that, and I thought hardcore about getting in, but I didn't. I'm picky, guys. I'm picky. And again, it drives me nuts at times because I will miss trades like this. Zambezi, what you got? New Kiwi yen long. Been in for quite some time since the 12th. Okay, so 12 days. Yeah, look at me. Tell you what you think is happening in that pair. Price has been in there. Okay, yeah. Let's look at Kiwi yen. Hell yeah. Hell yeah. Yeah, I know that. Yeah, I do remember it being on the bullish list back then, 10, 12 days ago. Where's it at today? Yeah, it's down here to -1. So definitely no help from the edge finder's point of view. From the 12th. All right. 12th is right here. Ah, yeah, it's just straight sideways for you, huh? Let's see here. So I had some demand zones drawn up over here. Let's see. Was that a 1 hour? Okay. So looks like I had drawn up a demand back here at one point. Price left the zone in a hurry, came back in a hurry, but just barely missed it. So if I zoom in, guys, you'll see that missed by a few pips or a pip or a few pipettes, right? But then anyway, price went along, it did its thing, and then came all the way back and bounced into that demand zone. Is that one I brought up at one point, Zambezi? Because, yeah, that's a great spot to get into. And then I think, yeah, and then I was looking at this supply up here as far as a take profit, and it's just went straight sideways on you. So that right there would have been a good take profit, to be quite honest with you. Depending on your, how many pip range you had on your stop loss, I guess. But you said 91.99. 91.99. Okay, yeah. So down here. Yeah, I mean, hey, at this point, it's giving you over 100 pips. Right? Because if you got we'll just call it 92, just to keep the math easy. At this point, it's giving you 100 pips. How many were you going for? Well, anyway, regardless of how many you were going for, yeah, just be aware of these zones. I think I've mentioned this last couple of days. No matter what trading style you have, you want to be aware of these supply zones and demand zones, because see what happened? Prices entered that zone. Looks even better on a 2-hour time frame. Bounced into the 2-hour zone and has now gotten a rejection, right? But yeah, that's unfortunate that you got in that trade for 12 days and it's just done nothing but go sideways on you. Like, really? Really, market? You're going to treat my guy that way, Zambezi? But if I'm looking at the zones, the demand zones, and yeah, the best looking one I have is still that 1-hour chart. So when you're looking at a zone like this, the way to think about this is when price left the zone like it did back here. So let's just go back here. Hold on a second. I'll show you something that might help you out. So when price comes, let me zoom in, but my mouse is being stupid. Okay, so we had the basing action, right? And then you have price leave. So when price leaves up here, wherever it kind of creates a new swing high, which I would say would be right in this area because we've immediately had a retracement down, I would just kind of put up a line and just know that, hey, if this price had the power to go that far, then if I wait for price to bounce into the zone and I buy into that zone, then I would expect price to go back to that point. That's what happened. So if you were in this trade back, well, you said the 12th. I'm getting ahead of myself. Well, anyway, I'll still make my point. So, just expect price to come back to the swing high. So again, we go back here, price left, came back. Okay. Then I would expect to take price back to that point. So let's fast forward ahead to where price actually hit the zone. Yeah, here we go. So it's not really much of a coincidence to see that line I drew at the top, that swing high, is right at about the same spot. Okay, so price is about the same spot. So I would only expect to take price back to that point. Now, you got in the trade somewhere in this area, and yeah, for a while, for about a day, it looks like it got over halfway towards your profit target. But then it just screwed you. It got lazy for a whole week and a half, almost 2 weeks now. But if I were in that trade, I would have definitely been out by here, is what I'm trying to get at. Does that make sense? Because the goal is just when you get into a zone trade, okay, when I get into a zone trade, the only expectation I have is that it at least makes it to the opposite zone on that same time frame, if that makes sense. So, yeah. But look, if I were in this trade where you got in, I would have ridden it out this whole time too, because I would expect price to go to that zone. And it made it to the zone. It just hung up your capital for almost 2 weeks, right? So what can you do now if you're still in the trade? I mean, it's just like that dollar yen position we looked at earlier. You got another demand zone down here. I would join you on that personally. Now, it's not giving us a bullish signal on Kiwi yen, but dollar yen is, and does it not have this same looking demand zone? Remember we looked earlier? So obviously that's going to cut into some of your profits, but at this point, think about it. You've already hit the overhead supply. The overhead supply, the unfilled orders, is what these traders in here utilize to push price back down. So it'll either catch a bounce here, or it'll catch a bounce back at the origin of the overall strong move up, because there's another demand right here. But again, Kiwi yen is a neutral item, so it's not even on our list. But dollar yen is. So if we compare and contrast this a little bit, okay, dollar yen, just look at that same zone. We got the same zone in the same area down here. So obviously, I'm not going to be interested in Kiwi yen. I'm interested in the dollar yen because the dollar is the currency with a little better strength. See, Kiwi is down here, 42%. Dollar is at 53%. So it's a little stronger. So I don't know. I mean, you might ride it out and see if you do get a pullback, if it just bounces off that zone. Okay, talking about that demand zone. But yeah, just for future reference, that's where I would want to be at if I were you. Just make sure that you cut out take your profit just a few pips ahead of the zone. And always expect that you'll get this bounce. Now that bounce may not be enough. It may not be enough to take price all the way back, right? And take away all your unrealized gains. But I would at least expect what's happening, get that bounce, the reaction from it, but then a continuation. If I were, buying into a trade or getting into a trade where I've got a bullish signal. So hopefully that helps you out, my friend. Hopefully that works out and rolls back over for you. But it's really just kind of a little bit of a gamble because it'll either continue back up from this point. Maybe it comes down to this point before bouncing back in your favor. Maybe it takes away all your unrealized gains and comes all the way back to the origin, right? So, I mean, currently, hell, you're up. You're currently up, what, about 70 pips or so on profit? Well, 80 if you got in right at the 92 level or 91.99, as you said. So 80 pips is 80 pips. Here's the cool thing. If you take profit now, and I'm not telling you what to do, if you take profit now, you could always get right back in this trade if it declines back to the next demand. Okay. I mean, 80 pips is nothing to shake a stick at, and you would still be taking the bulk of that unrealized profit. So again, I mean, obviously you're your own man. I'm not going to tell you what to do, but if it were me, I would be getting out of that trade now. Or maybe just see what this candle does. I mean, you've got to look at it this way. It looks like it's trying to push back up a little bit for you. So if we just, step down to some smaller time frames, what have we got here? Well, okay. You're currently bouncing into an indecision candle. Okay. It's a little bit of supply. It's not the greatest supply zone, but it is an indecision candle. So perhaps that could, push price back down. But yeah, that's what I would do. I would personally just take profits, and then if I really like the asset, which I don't like Kiwi yen, I like dollar yen, I would just wait for a retracement down to the next demand zone. Hey, go back to the well, see if it can pay you a second time, right? So anyway, hope that helps, man. Anyway, back to, see, oil is going to drive me nuts because we've been referring to that. Anybody that watched me on Ola Prime when I was streaming there, me and Michael, me and Richard, or the three of us, we always talked about oil being our problem child because it just doesn't like to obey rules, right? It's more of a fundamental based asset to trade. When it comes to technicals and supply and demand zones and everything, it just seems to have a mind of its own. So it's just annoying to see this. 2 demand zones that actually worked out that I didn't even get into. Kiss my ass. Yeah, we've already looked at that. Yeah, I've stayed safe, guys, because I've had a few of these other alerts hit, but I just never really I haven't gotten a candle in the opposite direction yet. 1 hour time frame. Remember, I had this demand zone down here on Aussie CAD with a bullish signal, but it's a little higher on the curve. Because my swing low's down here, my swing high's up here. Where am I at? Diddling in the middle, right? So as you can see, I've got a new alert down here. That's where I'd rather be buying anyway. Get a discount a little deeper down. Aussie CAD. And then pound Aussie is the one that's actually off the list now. So yeah, I'm literally just left with like 4 total pairs that I like. I've already looked at oil. So let's go look at euro dollar. What have I got? About half hour left. Euro dollar, euro Swiss, euro Aussie. euro dollar, the most liquid currency pair in Forex world, euro dollar. As a short, we're looking for shorts here. 8 is below 21. 8 EMA is below 21 EMA. So that gives me permission to short if I find a spot. My 50 on the 1 hour time frame, my 50 is below 200. Check. Looks like I did draw up a supply zone right here. If price returns to the zone, then it has no choice. It has to pierce the 200 EMA, so that's a good thing. So I'm basically looking for RSI to pierce 80. Pierce the 80 level. Okay, remember, I use 20 and 80. Very extreme levels on RSI. Hence, that I miss trades sometimes, even if they work out well, just because I'm looking for the extreme readings. So this may be different for you guys. I mean, I know 70-30 is the default for RSI. And one of my instructors actually used 60-40 for the RSI settings, the upper band and lower band. So yeah, I mean, you know, there's more than one way to skin a cat, as Daddy used to say. But yeah, I'm just mainly looking for. Now, that's not to say that from time to time, because obviously you can still see with the numbers. Right now it says 34. That's not to say I'll utilize or I'll be 100% hardcore that way, but for the most part, that's the way I was taught, man. That's the way I was taught with this strategy, was to look for the extreme readings only. So I'm sure there will be times, and I think I've already, one of my wins, I think last week was one where I, it didn't quite get to 20 or 80. It got to like 22 or 23 or something, close enough, right? Oh, by the way, guys, I totally forgot to even mention this at the outset. I have I guess you could call it an interview. I mean, I've already done an assignment, a video assignment, and answered some questions for a company, which I do not want to jinx myself, so I'm not going to list any details, but I might have a possible position as a financial analyst / content creator for one of the larger financial news services online. That's been my goal. I was with All Up Prime up until January 8th. So ever since January 8th, so a little over a month and a half, or right at a month and a half, just been out on my own, guys. And that's why I've been able to focus 100% on my streams, which I love. But I got to get that bill. I got to get that money rolling back. Hey, I got a stash built up that will cover me for a couple more months. And of course, I've got 2 challenge accounts and a funded account. So, when it comes to trading, no matter where you're at, it's not always a good idea to rely 100% on your trading, right? You want to have a job. You want to have some type of income coming in so that you don't make stupid decisions on your trading. Because when you don't have any stress, when your bills are paid, trading is it's a lot less stressful. Okay? I don't want to say easier. I don't want to say necessarily simpler, but you want to make sure your bills are covered, right? So I'm doing pretty well, I got to admit. I feel like within the next, we'll call it 6 months, a year, I should be able to just rely solely on trading. But remember, I've been in the game for 12 years. I've been more so a student of the game. Okay. I've never had the big accounts, the big cash accounts. Okay. So in the efforts of transparency, right? It's important for you guys to know that I don't have the big trading accounts. I've never had access. I came from a poor family, so I just never had access to it. And I spent all that time studying, and I did have one small account. But then, so yeah, I never had a challenge account literally until a year ago, right at about a year ago. So that's been my growing, if you will, outside of all the study I've done and testing and back testing and this and that. But anyway, I say all that to say that I'm just not to the point yet to where I can, make the profits actually pay my bills and all that, if that makes sense. So having said all that, I think I might have possibly landed a spot as the analyst because it doesn't change what I know in my head, right? So thankfully, I must have done a good job on the video I made for it. But anyway, yeah, I've got an actual video chat with them on Thursday morning for the first time. So pretty excited about that. The goal is to get the bills paid with a regular, type of job, but at least this way it's in my industry, which is trading. So I'm looking forward to it. Please cross your fingers because if that's the case and I get that, then that makes this what I'm doing for streaming and content creation all the more simpler and all the more exciting to where I can, be even better for you guys because that's what I want at the end of the day. Okay. This is a labor of love. And I get a kick out of teaching and coaching because, look, the selfish side of it is it makes me better. Is that okay to say? Right. But I obviously love helping because in those 12 years, I've learned a lot. Okay. And I am the statistic where I have blown an account. And that's exactly who you want teaching you guys. We've all blown accounts. Any good instructor, coach, teacher in trading worth their weight has blown an account. That is the best experience you'll ever get. When you blow an account, when you lose a big sum of money, yeah, that's going to teach you even more than anything I or anybody, Trader Nick or anybody could teach you, right? It's one thing for us to tell you not to touch the stove. It's another thing for you to touch the stove and burn yourself before realizing, oh, okay, that's what they meant. So anyway, not to get off on a side tangent, but I just realized that I didn't tell you guys. So hopefully I get that position. That'd be great. So anyway, euro dollar shorts. I've got a 1 hour supply up here. We had bounced in to that supply. Let's see. That was, the Sunday trade I avoided. Worked out well, damn it. But ever since, we've kind of come down and went sideways. Anyway, we did have, well, that's because all the currency indices kind of went down yesterday, except for the Dixie. Right? Actually, I need to update and look and see where we're at today. I haven't done that. So there's the Dixie, guys. Kind of got that spike up. Monday started off kind of low, actually. Let's turn on my sessions. I just realized I don't have that on. So here's my sessions indicator. Okay, here's the Sunday open. So on the Sunday open, we had, this is the Dixie. This is the dollar index. Okay, on the Sunday open, we had just a big ugly drop to the downside before regaining and pushing back. So we've been up. We've been up as far as I'm concerned. Yeah, we had the ugly drop, but that was a lot of, uncertainty. Uncertainty from President Trump's, mention over the weekend of increasing the tariffs. So basically what happened, guys, on that, as far as the Supreme Court, remember the Supreme Court struck down his tariff. Trying to find the details I had written up down here. Struck down his tariffs, his IEEPA tariffs, right? They were called IEEPA. Let me just go find my notes here. So he basically just kind of pivoted and went at it a whole different way. So there's some different sections in the the Trading Act, the Trade Act of 1974, I think it was. So he was utilizing one section for the IEEPA tariffs, and that's the version that SCOTUS, the Supreme Court, struck down. So what he did was pivoted to Section 122, if I remember right, which basically gives him kind of a emergency declaration way of doing it, of doing the tariffs. Okay, so that's a new route. And when that happened, the global tariffs, he moved from 10 to 15%. So it's just basically creativity points that he gets. He just basically moved from one one section to the other. So basically the tariffs remain on. If that makes sense. So anyway, I say all that to say that there's uncertainty. There was a lot of uncertainty hanging over the weekend because of that. So what happened? Market opens on Sunday here in the States, dollar drops. Dixie drops. Okay. Got cheaper prices. So at some point, everything kind of stabilized, and the Dixie itself has been up. But the other currency indices have been basically down-ish. There's the Dixie again. Euro down, yen way down. Whoa, look at yen drop. Yen dropped like crazy. Where's dollar yen at? Oh, okay. Yeah, it just looked that looked scarier than what I thought at first. But yeah, they obviously just opened the index as far as the charts go here shortly ago, 7 a.m. my time. Yeah. That's still quite the gap on the Japanese index, though. Look at that. Well, the Japanese index dropped right into a demand. See that? See that basing candle there, a 4-hour candle? 1-hour candle. It's basically the same candle. Almost the same candle. So we're going to get a yen bounce from here? Yeah, I would be careful just kind of going back to that Kiwi yen trade you're in. Where's New Zealand at? Because think about it. Your Japanese yen index has bounced into demand. So if it bounced into demand, then it would not be crazy to expect to bounce. If we get a bounce on the yen, what does that mean for your Kiwi yen position? Okay. That's yen strength, which over here on the Kiwi yen would mean yen strength to the downside. Yeah. So anyway, yeah, just another piece. I just wanted to say that just as another piece of the puzzle, right? It's always good to, when you're in a trade, especially currency trades, it's always a good idea just to save all your currency indices up here, just to see, hey, are we in any major support resistance areas, supply and demand zones, right? Really good idea. So I like to have the VIX up here, the volatility index, which, by the way, we did bounce back over 20 of late. So in a little bit more of the elevated territory when it comes to the VIX, the volatility index, followed by the 8 major currencies: Australia, okay, Britain, so AXI, BIXI for Britain, KEXI and the DEXI for Canada, US, EXI, JEXI, SEXI, and ZEXI to round out the rest of the currencies. It's just a good idea, guys. This is one of my favorite things I like to do on Sundays from a technical analysis, aspect, just to make sure, hey, am I in any daily 4-hour supplies demands on the currency index itself? Because whenever I get, if I can get zones to match up for whatever currency pair I'm looking at, if I can get those 2 currency indexes to line up as well, it's a nice thing, guys. It's nice. It's very nice. Let me just double check my time today. Live stream. Let's see, Tuesday. Okay, yeah. So I'll be on at 9 a.m. Central Standard Time over on A1 Trading's on Trader Nick's stream. 9 a.m. So that's 10 a.m. New York time, 10 a.m. Eastern Standard Time. I just wanted to double check that. Okay. So euro dollar, we looked at that. Euro Swiss, Euro Aussie. As far as that euro dollar short, yeah, see, I'm just being thrown off by the fact that we bounced into the daily 4-hour demand on Thursday. Now we have pushed to the next supply, and what did that supply do? It's bounced back down. So it's, it's catching It's catching movement to the downside. In its wake, I kind of isolated this supply zone right here, this 1 hour. So that's probably still the one I'm going to remain with. Just looking for a simple retracement, guys. It would remain under the 200. And I would love to see the RSI go above 80 on a 1 hour. Yeah, it'll have to be the 1 hour, because if I look at the 15-minute, because I do two things. I either do the 1 hour or the 15-minute utilizing this strategy, guys. Okay. 1 hour or 15. Well, on the 15, if I were to use that, then by the time price comes up to the zone, what's going to happen with the 50? Okay, it's going to flip. It's going to cross over the 200 to the upside. I don't want that. I want to see the 50 remain below the 200, ideally on both time frames. Okay, even if I'm solely looking at a 1 hour trade, I would still like to see the 15-minute underneath as well. Again, it's all about matching up, getting as many odds enhancers in your favor as possible, right? So yeah, I don't think so. I won't be able to use the 15-minute. It would have to be the 1 hour. Okay. So that's euro dollar. I've got the alert. Again, euro Swiss, euro Aussie. So let's go look at those. Euro Swiss. Okay, euro Swiss, I can already tell is probably not going to be doing what I need it to do, because on a 1 hour, I've already got the 50 at the 200. So when price gets up to supply, what's going to happen? The 50 is going to be over the 200. I don't like that. So I can't really utilize this supply zone up here, guys. Not unless price goes sideways for a while and kind of works its way out. Because currently the 50 and the 200, yeah, that's currently not going to agree. And here's another example right here where price got just close to a supply zone. And RSI went over 80. And what happened? Price sold off down to the next potential take profit. Right there for a short. So that one was a good one. But again, I wait for unfilled orders. So that's why I didn't get into that. And plus, I didn't like the wicks. On a 4 hour chart, I do not like this. If I get into for me to qualify a good zone, the candle right before, so the basing candle, I can't have it way down here. It's got to be up here as well. I don't know if that makes sense to you guys or not, but this candle right here didn't even, there was no consolidation up here. All the consolidation took place down here. And then this turned into basically just a big sweep. So see, that just doesn't look good at all from a 4 hour chart. 1 hour looks a little better, but not from a 4 hour. Anyway, so that's euro Swiss. And then lastly, guys, euro Aussie. Okay, so got a supply up here that I'm keeping my eyes on. Go to 15 and see what we look like on a 15-minute. You know, I had this one here drawn up. We did get a push away, but we also had a demand zone that was too close. I think I mentioned this yesterday. It's just too close. I needed more distance between these zones, so I avoided them because of that reason. But still worked out. Okay, supply bounced price down to the demand. Then demand pushed price right back up. Okay? That's how zones work. But I'm more interested in this spot up here where I've got this alert. Actually, I believe that's a 30-minute. Yeah, yeah, right here. Well, maybe it is 10-minute. Forgetting my time frame now. I'm on, yeah, 10 minutes. So there's another 10-minute supply. See that indecision candle right there? Wicks on the bottom, wicks on the tops. Okay, that's my indecision candle followed by drop in price, breaks the structure, higher volume picking up. And there's nothing to do but sit and wait. Yeah, that's probably it. Probably the best one. What about a 4 hour? I just don't like it. Yeah, I'm just not overall, guys. I'm sorry. I got to admit, I'm just not feeling a whole lot of these assets today. I'm just not too excited about anything. I'm really not. I really am not. I mean, yeah, I just really am not. Nothing else to say. All right, boys and girls. I think I'm going to cut out of here a little bit early. I do have my session with Trader Nick and them here in a little bit, so I'm going to get ready for that. I got a couple things I got to do beforehand. So, yeah, it was just a little bit of a wash today, guys. Hopefully, we can get some more action after Trump speaks tonight. Maybe turn some of these assets on their heads, push prices to some further out alerts that I'm more interested in, because I'm just not overall excited about a whole lot of anything right now. I got to admit, I got to be honest with you guys. I mean, I'm probably going to take a look at some of these stocks over here, but I even looked at a lot of these yesterday, talking about like MasterCard, Visa, Amazon, a few of these other ones, Netflix, Microsoft. I was looking at a lot of these, and they're close to some zones that I'm after, but it's just way too strong of a trend towards those zones. And I just don't know that I'm too excited about them. So yeah, overall, it's just not my favorite day to trade. It really ain't. Some days, if you don't have something just smacking you in the face, guys, if you don't have something smacking you in the face, these are great days just to perhaps stay away from the chart. Maybe go read a book, right? The biggest part of this game, the biggest part about trading is psychology, guys. How we think about things, how we react to things. So it may be cheesy, but if you guys are looking for something to do, you might find a little more value in just reading a good book on thinking. Think and Grow Rich, The Compound Effect. Some of the trading books by Kathy Lean. How I Raised Myself from Failure to Success Through Selling. Okay, that's a book I read. Now it's in selling, but there's some of these selling books out here can actually help you out in your mindset, even though we're not here to sell anything, right? We're here to trade. Well, some of those selling books, I've read a lot of them, and they've really helped me out a ton. Just understanding mindset, understanding people, but the most important thing is the psychology behind it. What makes people tick? Why do people buy in this area? Why do people sell in this area? Guys, it's pretty powerful when you understand trading and you understand the herd mentality. It's really powerful how that can help your trading. So yeah, for me personally, that's probably what I'm gonna do. I'm gonna just probably open a book, stick my nose in a book today. Okay, I've got one meeting after my stream, and then I'm probably just gonna read a book the rest of the day. It's good to brush up on your thinking skills and people skills, psychology stuff, guys. Okay, we're not here to be shrinks. We don't need to see a shrink. But like I even have a mindset coach. Okay. In fact, I have a meeting set up with them on next Friday. So it's good to do that. It's good to work on our mind. It's good to get away from the charts once in a while and just step away, meditate, reflect, think, all that fun stuff. So anyway, if you guys ever have any thoughts or questions on that type of stuff, let me know. Okay, I got a ton of books I could recommend if you guys are ever looking for a good read. Just let me know. Okay, be happy to look me up on my look. Also, look me up if you guys haven't already on all of my socials. If you go to the on the channel here, right here, okay, you see my link tree. Well, that's all of my social sites, because everybody has their own favorite, whether it's YouTube, Facebook, Instagram, X, TikTok. Okay, I make a daily shorts video, and I throw on here every weekday, sometimes on the weekends too. Just depends on if I'm busy or not. So if you guys don't know about that, you can always go and look me up there. Okay, chat with me, message me, let me know that you found me here on my stream. And I'd be happy if you guys ever have any questions, anything, one-on-one questions, just let me know. Again, I'm here to help. I'm not here to do anything but help. Okay, because again, I love helping, but it also helps me get better too. Just being honest, right? Just being transparent. It's a win-win situation. So anyway, guys, have a wonderful rest of your day. I'm going to get up out of here. I'll be back tomorrow at 6:30. Take care.